Hi everybody, welcome back to Women in Global E-commerce. I hope you've enjoyed all of the sessions so far. So this next session is a very topical, very important sort of discussion to have. So we've invited Alexandra Wyatt from SimplyVAT to talk to us all about exporting to Europe and also all about UK e-commerce VAT changes for 2021. Please do ask us questions. We did have a few questions from the last session, which is great, but please do use the chat function to ask questions because we may have time at the end for Alexandra to answer them. So just a little bit about Alexandra. With her background in marketing and business development, Alex has risen to a global project manager at SimplyVAT. At DIT here, we've actually used Alexandra quite a few times. She's a fantastic speaker, so you may have seen her at one of our events before. Her extensive knowledge of the industry and passion for, extensive knowledge of the industry and passion for empowering businesses to grow globally has made her an active member of the e-commerce community. She has previously spoken at conferences all across Europe, helping sellers to understand the ever-changing online market and the vital role that VAT compliance plays in sustainable expansion. So thanks, Alex, over to you.
Thanks so much, and thanks for having me today. I'm super excited to be here. So I have quite a lot to kind of go through today. So if you have any questions as I go through, yeah, please pop them into the Q&A section, and I will be happy to answer towards the end of the session. So first, I'm just going to cover off latest changes with Brexit and what's happening. Most of you probably know, but I'm just going to kind of rattle off a few kind of over high-level bits, and then I'm going to go into trading physical goods post-transition period, what that means for businesses right now. And then I actually haven't added this point, but I'm also going to cover the 2021 EU VAT reform that's coming up as of July and some of the big changes that are happening. And then, like I said, some time for questions. So yeah, please pop them in as and when you have them. So what is the latest with Brexit? And I know the DIT love to call it the end of the transition period or the transition period. So first of all, we have left the EU as of the 31st of January last year. And then we went into a transition period. So from a VAT point of view, you wouldn't have really seen any differences all of last year because that transition period meant that we were still part of the EU during that time. Then we, a deal was agreed on the 24th of December, which would mean essentially there's no tariffs on goods produced in the UK. But from a VAT point of view, we kind of knew what was coming. A deal or no deal wouldn't have really impacted what was going to happen from a VAT perspective. Duties is a whole nother bag, but from a VAT point of view, we kind of knew what was going to happen. So what's changed since the 1st of January of this year. So the EU VAT rules no longer apply to the UK, except for Northern Ireland. So, Northern Ireland has the Northern Ireland Protocol, and Northern Ireland is actually part of the EU for VAT purposes. So what I'm going to be covering today is not including Northern Ireland. So if you are holding stock in Northern Ireland and shipping from there, my presentation won't apply to that, but happy to maybe take those questions offline and we can help you if you are trading through Northern Ireland. What essentially happened with the agreement was that we knew that there was going to be a customs border coming between the UK and Europe. So what that means is there's no free movement of goods between the UK and the EU like there was before. So if you were utilizing the distance selling rules where you were holding your stock in the UK, selling to private customers across the EU up until set thresholds were met within a calendar year, those distance selling rules are no longer applicable as of the 1st of July. So if your goods are coming from the UK, you're going to be seeing everything as an export from the UK and then an import into the EU. So everything exported from the UK will be zero rated for VAT purposes, and then an import into the EU will see any import VAT being charged as goods go through customs. Another big thing is that the Amazon fulfillment network. Amazon, if you're using it as a fulfillment network at the moment, they have said that they are no longer going to be shipping goods between the EU and the UK. So if you were holding stock within a UK fulfillment center, or you were using the Pan-EU program, shipping goods into the UK fulfillment center, Amazon will no longer be moving your stock in between the EU countries. You're going to have to import your goods directly into an EU country in order to continue to use the Pan-EU program, and again, directly into their UK fulfillment centers in order to use the UK fulfillment network from there. Now, if you were making any purchases across the EU, so any B2B transactions, there's no longer going to be the reverse charge mechanism happening on your invoices anymore for any goods being exported, out of the EU coming back into the UK. That's something to consider if you are purchasing or manufacturing any goods. I suggest looking at your supply chain from there, but I'll get into this in a little bit. Any import VAT. So if you're importing into the UK, you're going to be charged with UK VAT as normal, but it wouldn't have been normal if you were importing from a manufacturer in maybe Portugal, for example, and moving your goods off to the UK warehouse. Now you're going to have to pay import VAT for those goods, or you can utilize the postponed accounting program. And the postponed accounting program allows you to it helps your cash flow because it means that you don't have to pay import VAT upon importation, and you'll just offset it on your VAT return here in the UK as an input and output. So something to consider if you are making any imports into the UK. Now, if you are making any imports into the EU, not all countries have a similar postponed accounting program. So it's something to consider if you are exporting goods into the EU, that you will need to take this into consideration, all of these extra kind of costs. The import VAT going into the EU is reclaimable, but you must have a VAT registration in the inbound country in order to reclaim your import VAT on your VAT return. So just keep that in mind if you are moving stock or importing goods directly to customers as well and paying those import duties and taxes. You won't be able to reclaim the VAT, the import tax, without a VAT registration. So we're going to deep dive into cross-border B2C supplies, and I'm happy to kind of cover a bit of B2B as well, should you guys have any questions about that. But looking specifically at B2C, a lot of e-commerce sellers, what happens, like I mentioned before, there are no distance selling rules from the UK into the EU, and again, vice versa from the EU into the UK. So if you are looking to utilize the distance selling rules, you're going to have to move stock into an EU country. And once you do that, you'll have access to those distance selling thresholds again, because they're still in place across the EU, just not between the UK and the EU any longer. The big change which many businesses are going to see is any import of goods direct to consumers from the UK. So if you're shipping, if your warehouse or fulfillment center is here in the UK and you're shipping directly to private customers across the EU, then you are going to have to use Incoterms to decide who's going to be the importer of record of your goods in order to decide who's going to pay the import duties and taxes upon these goods clearing customs. So you're either going to have to choose to be that importer of record as the seller, or you can make the customer the importer of record. I know that some couriers have offered different options as well, so we can deep dive into this a bit in a second, but typically when we look at importing into the EU, you're looking at you, the seller, taking on that obligation, or you're making the customer pay the import VAT and duties. And just one quick last thing here. If you are moving goods into a warehouse in the EU, you don't need an EU entity to do so. You can use your UK entity to move goods into the EU, but that does mean you will trigger a VAT obligation to get your goods into the EU. So if you are planning to move those goods in to utilize the distance selling thresholds, then make sure that you're getting VAT registered in that country. And keep in mind that the VAT registrations can take anywhere between 4 weeks all the way up to about 10 to 12 weeks, what we're seeing in France and Germany at the moment. So keep that in mind as you start to plan your exports. So many of you may be using the Amazon fulfillment network, and I just kind of wanted to double down on a few things that we've noticed over the last, 2 months of sellers trading with Amazon. What their communications stated slightly different to what they were actually doing in practice. So just wanted to kind of deep dive into this a bit further. So first of all, like I mentioned, the Pan-EU inventory is no longer being shipped between the UK and the EU. And Amazon has been really clear about this from, I think, July of last year. They said that they were not going to be shipping inventory in between the EU and the UK. You can kind of see that they would have to fill out customs declarations, any import VAT and duties would be applicable, and it can kind of just be a logistical nightmare if you, the seller, aren't filling out those customs declarations and know what your items are. So I can see why Amazon has done this, and they've kind of stuck to this rule as well, not shipping any inventory between the UK and the EU. The second thing that Amazon has been really clear upon is that they want goods shipped DDP. And DDP means delivered duty paid, and that's where you, the seller, are the importer of record. You're paying the import VAT and duties in order for the goods to just clear customs. And that kind of takes it makes the customer experience a lot better because the customer doesn't have the obligation to pay this import duties and taxes. So, and Amazon is very customer focused. So if you are selling DDP, then make sure that, you are accounting for the import VAT. And I'm going to cover a little bit further on what it means to be shipping DDP in the next few slides. The low value consignment relief goods. So low value consignment relief is a threshold of 22 euros when shipping into Europe. So this is for any consignments, so total parcel value going into Europe with that threshold of less than 22 euros. If any of these goods go through, go cross-border, Amazon has been seen to be shipping these goods cross-border under DAP Incoterms, and DAP is making the customer the importer of record. But the beauty of the low value consignment relief threshold is that there is no import VAT due upon importation for anything less than that 22 euro threshold. And it's just this little, not loophole, it's written in the legislation, but it is this threshold that for small value items, they can go in without any import VAT or duties on them. So we have seen through our clients' data that Amazon has been sending these through under DAP Incoterms. So keep a lookout for this. Amazon may send those low value goods cross-border for you. The other thing Amazon has changed as well is the VAT responsibility column in the VAT transaction report. So us as a tax agent, when we look to create VAT returns for our clients, Amazon has added in these 2 extra columns because here in the UK, in some instances, Amazon is now jointly liable or liable to collect the VAT on behalf of the seller. At the point of sale. So you will be able to go into this VAT transaction report and even see if Amazon is liable or is collecting the VAT on your behalf. So if you are missing some money from Amazon sending it back, it might be because they have kept it and they're paying that onwards to the HMRC on your behalf. So have a look in your transaction reports to see if this is applicable to you. You don't want to be paying VAT twice as well. So just touching on that low value consignment relief, what I talked about before. So the UK used to have the low value consignment relief up until the 1st of January this year, and in line with us leaving the EU, they got rid of this low value threshold. And it's really to kind of level out the playing field for local businesses, especially high street retailers that are VAT registered and having to pay the taxes on these goods, this extra 20%. Any goods that were coming directly from outside the EU directly to a customer with less than 20%, there was just not a way for the high street retailers to be competing, or any local businesses to be competing with these external goods coming in. So they abolished the low value consignment relief threshold here in the UK, and they're going to be doing this as well into the EU. So if you do have those low value items, you can continue to use the low value consignment relief threshold up until the 1st of July this year into the EU, and then they're going to be replacing it. And I'm going to dive into that by the end of the presentation of what they're changing it with. So what they've done is they've changed, if you're selling on your own website and you're maybe drop shipping goods from outside of the UK directly to customers here in the UK, they have changed how you should be collecting VAT. So any goods coming from outside the UK with a consignment value of up to £135, you will supposed to be collecting VAT at the point of sale rather than at the point of importation. So you'll be collecting VAT during checkout, and then your goods should be able to go straight through customs, going to the end customer without any import VAT or duties on those goods. Anything above £135, that is where they're going to go through normal customs procedures, where we're talking about asking who is the importer of record. Is it you, or is it is it the end customer paying the import duties and taxes? And so this is just something to think about if you are drop shipping goods from outside the UK to customers in the UK. And I've reflected it here on this slide here, the kind of differences. So any consignments less than £135, import VAT is no longer going to be collected upon importation. You're charging VAT at the point of sale. There's going to be no duties paid because the duty threshold is actually £135 here in the UK. So there will be no duties charged on your goods. And you're going to import your goods DDP in this case. It's all going to be accounted for in your local GB return. So just as normal. And if you are selling through an online marketplace, these low value goods, drop shipping them to customers in the UK, the online marketplace is now going to be responsible for these items. So that's a big change here. Anything coming from outside the UK directly to customers with a consignment value of less than £135 will be the marketplace accounting for this VAT. Anything over that, again, like I said, you're going to be charged with any import VAT. You're now going to be charged with any duties as well because you're above that threshold. And that will be paid upon importation going through customs here in the UK. And depending on your Incoterms used, it will, if you are going to take on that responsibility, you'll be able to reclaim the import VAT on your VAT return. And if you're going to make the customer the importer of record, they will have to pay this before they receive the goods. So I'm kind of switching back over now going into the EU. I've listed out 3 different models that you as sellers can use. I know in practice is much kind of slightly different than in theory what I've listed here, but we're going to go through this first. So the first model is you, the seller, are the importer of record. You're going to pay the import VAT upon importation. It's going to give the customers a better customer experience because they won't have any delays, any further delays going through customs, and there won't be any additional surprise charges as well upon the goods going through customs. So this is a good customer experience, and you also might not see as many returns coming back to you. You know, I've heard from sellers who are importing DAP that you know, customers might not even pay the import duties and taxes if they didn't realize that they had to pay it, and you'll just see a higher amount of returns. So in this case, you know, depending on your customer experience and how you want to kind of lay that out, you should be the importer of record. Again, the distance selling thresholds don't apply. And the big thing to note from a VAT point of view is that if you are acting as the importer of record, then you, the seller, should be VAT registered in those countries. And the reason for this is because as you import goods into an EU country and you are the importer of record, you technically own the goods as they're imported, let's say into France. Now you're the owner of the goods as they're imported into France, and then you're doing an onward supply to a final customer from there. And that then triggers a taxable supply in those EU countries, in those inbound countries where you're importing into. So if you are acting as the IOR, keep in mind that there may be a VAT obligation to go alongside that. Now, many companies say, well, I don't want to register in 27 different countries, and I highly suggest not to register in 27 different EU countries. It's not worth it, and there is an EU VAT reform coming up, which is going to change the landscape. So if you have specific countries that were doing exceptionally well before the end of the transition period, then I would suggest maybe getting registered in those countries and utilizing the distance selling thresholds from there once your goods are in the EU, or VAT registering in the select few countries where your items are doing really well to continue the flow of goods up until the EU VAT reform. So yeah, keep that in mind for the Model 1 listed here. Model 2 is where the customer is the importer of record. So once the customer is the importer of record, like I said, they're paying the import duties and taxes upon importation. Anything going through with a low value consignment of less than 22 euros should go through under that DAP Incoterm so that you haven't created any taxable supply onwards. Yeah, and the customer won't see anything different because there's going to be no import VAT due and no sales VAT due. So the customer won't see anything different for those low value items. For you, the seller, it is the least burdensome option. You don't have to worry about VAT registrations. You don't have to worry about paying any extra import duties and taxes. So making the customer the importer of record does have its benefits for specific sellers. But like I mentioned, it might have a worse customer experience. But a way that you can kind of flip that is really over communicating with your end customers. If you have the opportunity to communicate that these charges are going to happen, then I suggest that you put it wherever you can. So during the checkout process, during your email communications to your customers, during like maybe in a shipping policy on your website, really over communicate that that these extra fees are going to come about for them to kind of mitigate any negative customer experience. And then Model 3 here shows you actually moving stock into an EU country. So moving goods into an EU country to then distribute directly to customers from there. So this could be using a 3PL across the EU. This could be using Amazon's fulfillment network across the EU. And then actually utilizing the distance selling thresholds once your goods are in that EU country. Wherever you're holding your stock, you're still going to need an EU VAT registration. So wherever you're, whichever country you are in, make sure you're getting VAT registered in advance of that. And yeah, that's our 3 models here. So we're going to look at it in practice a little bit further. So first, Model 1, like I talked about, you're going to continue to ship from the UK. You are going to act as the importer of record. You're going to VAT register in the countries where you want to be the importer of record. You're going to charge the local rate of VAT on your sales to your end customers. And when I say local rate of VAT, I mean wherever you're VAT registered, you're going to charge that rate. Depending on if your customer is in France and you VAT registered in France, you're going to charge 20%. But if you're VAT registered in Germany and your customer's in Germany, you're going to charge 19%. So just reflecting that local rate of VAT where your customers are based. Then you're going to keep a hold of all of your import documentation. There could be the SADs, the single administrative documents, and those will allow you to reclaim your import VAT on your VAT return. So although you're paying the import VAT upon importation and collecting the VAT at point of sale, you're going to be able to reclaim that import VAT on your local VAT return. Under Model 2 here, so you're going to continue to ship from the UK again. You're going to make the customers the importer of record, and they're going to pay the VAT, the import VAT. And for you, the seller, you have no additional VAT obligations. But you're going to make sure that you're over communicating with your customers as well. And then Model 3 is you're going to move goods into an EU warehouse. You're going to VAT register where you're holding your stock. You can utilize the distance selling thresholds, going cross-border B2C. But there is a caveat. Please note that fiscal representation may be required depending on the countries where you are getting VAT registered. Just deep diving in a little bit further into fiscal representation. Many UK businesses wouldn't have heard of this before, and it's because you were part of the EU and we didn't need fiscal representation. Now that we've become a third country to the EU, fiscal representation may be needed depending on the country. And these fiscal representatives are local businesses or people that are jointly and severally liable for the VAT owed by a non-EU based business. So the requirements vary between the different member states. They're not all the same. So for example, let's give Belgium, for example. Belgium, you will need a bank guarantee directly with the tax authorities in Belgium. That's going to be negotiated through a fiscal representative in Belgium when getting VAT registered. Whereas in France, for example, a UK business doesn't need a fiscal representative. Most non-EU businesses going and trading in France do need a fiscal representative, but France has stated for UK-based businesses, you do not need a fiscal representative. Now, some tax authorities are also kind of changing their mind over the last few months. So at first they took quite a stern approach in saying that UK businesses were going to need a fiscal representative when VAT registering in their countries. And now some of them have kind of retracted that offer or that request, and they have said countries like Italy, for example, you no longer need a fiscal representative. And just as of last week, Poland has also now said you do not need a fiscal representative. So things are kind of coming out of the woodworks as we really start to kind of see Brexit unfold in real time. So keep up to date on whether or not you need a fiscal representative, and if you do, make sure that you're appointing one as you're getting VAT registered as well. And the other thing to think about, just before I skip on to the next page, is that you need to make sure that you're factoring in these extra costs into your overheads, just like anything else in your business. So fiscal representatives can range in fees or require those bank guarantees, as I mentioned before. So make sure when you are kind of on the hunt for a fiscal representative, whether that's through us or externally, then that you are factoring this into your overheads as a normal cost to your business. So EORI numbers. So EORI stands for Economic Operator Registration and Identification Number. And it's really an import-export number for your business, and it's to identify your business as that importer-exporter from a specific country. Now, most of you will probably have a GB EORI number, and you would have been using this GB EORI number. You could have used it going into any EU country up until the 31st of December. But as after the 31st of December, the GB EORI numbers would no longer work when trying to import your goods into an EU country. So what that meant is that as a UK business with just a GB EORI number, you had to apply for a secondary EORI number to get your goods into an EU country and to identify you as the importer of record. The European Commission has stated that you should get your EORI number in the first port of entry post the transition period. Many of you may have already been shipping already. So if you are looking to get a secondary EORI number, you can technically just choose which countries. Some countries are processing them much faster than other countries. So for example, France and Netherlands are processing them really quickly, where somewhere like Germany isn't processing them as quickly. So keep that in mind if you are registering for an EORI number. And if you need assistance with this as well, we have a portal on our website. Otherwise, you can go directly to the tax authorities and apply for these. So I have we put together a handy little checklist here when you are starting to move your goods into an EU country. So I won't rattle through too many of these things, but there are a few things I'd like to highlight. First of all, reviewing your supply chain. So if you are manufacturing in the EU and you're moving your goods to the UK only to move them back to the EU, you're going to be hit with import duties or potential duties and VAT or cash flow impacts. So it might just be worth maybe even just utilizing or moving your goods just within the EU and then moving select stock into the UK. I don't know what's right for your business, you do, but have a think about all these kind of extra little costs that might kind of crop up due to the new customs border in between the UK and the EU, and adapt your supply chain as necessary. The other thing to maybe use is a bonded warehouse, in order to avoid any extra duties and so on from there. So just kind of have a think about it, your supply chain and all these kind of extra little costs that might add up in the long run. The other thing is the postponed accounting. You don't need to apply for postponed accounting here in the UK. So if you are importing goods from outside the UK and getting your goods, moving them right into the UK warehouse or fulfillment center, I suggest you use a postponed accounting program because it will only help your cash flow. You don't have to wait until the next quarter in order to reclaim on your VAT return. So utilize it if you can. Speak to your freight forwarder or logistics company to make sure you are utilizing the postponed accounting scheme, again, if you can. And then plan for any delays as well. If you can communicate any delays, I know that there's been a lot of difficulty getting goods into the EU recently. So make sure you are planning for these delays and communicating that with your customers as much as possible. And the last one I'm going to just touch upon here is keeping records. So what's really important is if you are exporting goods from the UK and moving them into any country, it doesn't have to be the EU, you want to be able to keep a hold of any documentation for of your exports. You need proof of export if you were going to be audited by HMRC, so that they don't make you pay the taxes thinking that you sold them here in the UK. So make sure you're keeping proof of export of your goods. This can be as many documents as you can gather. I know I'm running out of time, so I'm just kind of going to skip a little bit further ahead. VAT recovery at the moment, nobody's really traveling across the EU, so it won't really matter too much. But clearing customs, So make sure you're classifying your goods in advance to understand any import duties that might, you know, come up for your business. We partnered with a company called Customs Connect who can help with this classification of goods. So if you need help with that, identifying what your HS codes are or commodity codes are, you can reach out to them. Speak to your courier about Incoterms and who is the importer of record. I know a lot of couriers have been offering loads of different solutions. There's been loads of new Incoterms that aren't actually Incoterms being popped up left, right, and center. So speak to your courier and really dive into the detail of who is paying the import VAT, who is listed as the importer of record, and that's going to determine, again, whether or not you need to be VAT registered, or if you can even reclaim your import VAT as well, even if you were VAT registered. So keep that in mind when speaking to your couriers. And like I said, yeah, does your Incoterm mean that you have a further VAT responsibility? And again, keep that those documentations. So your proof of export from the UK, any commercial invoices, and your CN 22 and 23 forms in order to import your goods into an EU country. I'm just conscious of time because I know you guys have a jam-packed schedule today. So I'm just going to cover off quickly the EU VAT reform that's happening as of July this year. So there's a huge bunch of changes coming that is going to make e-commerce sellers' lives a lot easier than before. So first of all, there's new obligations for electronic interfaces. And electronic interfaces are marketplaces, for example. And where these marketplaces are going to be liable to collect the VAT at point of sale for specific businesses. So this is going to be a huge simplification for businesses because you don't have to technically report those in all cases. So I'm putting that caveat there because I don't have enough time to go into the detail. Next is the extension of MOS into OS. So if you were selling digital services before, you maybe were using the MOS scheme, which stands for the mini one-stop shop. It's now going to be extended into the one-stop shop, which is going to be covering physical goods as well. And what it means is that you only need one VAT registration across the whole of the EU, which is this OS registration, and you are going to be covering any distance sales of goods going cross-border. So OS is only for physical goods that are going to be held in an EU country already, and covering distance sales from there. You'll still need a local registration where you're holding your goods. And this is to reclaim any import VAT because OS is is just for any B2C cross-border transactions, whereas your local registration would allow you to reclaim any import VAT upon moving your goods into an EU country, as well as declare any B2B transactions and any local transactions as well. But the OS will really simplify. Instead of crossing over distance selling thresholds, you'll only need this one OS registration to collect VAT at the point of sale for your customers at their local rate of VAT and report it on one OS report. They're going to be getting rid of the distance selling thresholds and replacing this with the OS scheme. So if you are holding goods in an EU country, everything should be reported through OS. And then there's also going to be a new import scheme. So this is going to be the import one-stop shop. Very similar to OS, but it's for any goods with a consignment value less than 150 euros. It's going to be coming from outside the EU, going directly to customers in the EU. And if that does qualify for your specific products, any consignment values less than 150 euros, will be able to go through this IOS scheme, which again means you only need one IOS registration. You're charging the local rate of VAT and the place of consumption, and reporting this on this one IOS report. So I know we're kind of slowly running out of time, but we're going to be getting also rid of the low value consignment relief threshold as well. The big thing I want to note is that simplifications are coming, but you still need to comply now. So if you are trading into Europe and you're thinking, I'm going to wait until the simplifications come in, that is not an excuse in the eyes of the tax authorities. So if you are looking to utilize those schemes, please make sure you're complying now. And I know I haven't answered any questions, so if you do have questions, you can feel free to send me an email and I'll be able to get back to you as soon as possible. So thanks everyone for your time, and sorry, I've talked a lot over the last 40 minutes, but hopefully you have found it useful.
That's great, Alex. Thank you so much. And I think, I can speak for everyone when I say, oh my word, that's an awful lot of information, but it's also very clear and concise information. So thank you so much for that. We have had a couple of questions come in, but what we will do is we will facilitate those offline because unfortunately we are running out of time now. So thank you very much, Alex, for joining us. Now, the next session is going to be beginning at 12:30, and we're going to be talking all about meeting the world's fastest growing marketplace, which is onbuy.com. So make sure you join us for that in 10 minutes, and we'll see you there. Thank you.
Thanks.